Welcome everybody. This is the Thursday evening Viper Trading webinar. We are here to discuss trade setups using the Viper tools and the futures instruments, futures markets. First, we got to knock our standard disclaimer out of the way, so let's go ahead and take care of that right now. All communications from Viper Trading Systems are for educational purposes only. Futures and Forex trading does involve risk, and there is a risk of loss. Nothing contained in this webinar or other webinars, including the live trading room, are to be construed as investment or trading advice. And of course, everyone here tonight does know that you do trade at your own sole discretion. All right, so what we've been doing here for the past couple of 3 weeks on Thursday evenings is trading the collectively as a team, looking for currency trade setups, which I know all of you have really enjoyed. I've got a lot of very good positive feedback on that. So we will do a little bit of that later. However, what I'd first like to address is a topic that came up in the live room. Excuse me. Hey, Mindy. From, I think it was Mary. A couple of you have brought this up. Let me get over to screen one. I would like to address some topics here that are very timely, which is how to deal with trend changes early in the market, particularly the equity markets, when in the pre-market session and the opening, and certainly within the first hour to an hour and a half, we've got a lot of movement and we need to know how to address it. And so what I'm going to do is I'm going to take this YM chart and I'm going to run through, sort of how I look at it. And then come tomorrow morning and into next week when we're faced with similar situations on the equities at the open. And you can apply this to crude or gold or any instrument. The logic is all the same. So here's the open. I'm here in California. I'm just going to put a line right here. And this has been happening a lot lately. What will happen is 630 is right here, okay? Yeah, right about there. So let's go back. Let's back up for a second so we all kind of get on the same page, and then we'll move forward and look at how we deal with certain changes and things that happen in the market so that you're not, nervous and feel that sort of trepidation of what am I going to do? Should I be taking shorts? Should I be taking longs? How do I deal with this? So let's go back here. Here's midnight Pacific California time here going into this morning, Thursday the 27th. So we all know this is the European trading session, okay? So here we have the market had gone up, the YM came back down, and going into the open, we can see that we were in somewhat of an uptrend, yes? More or less like such. We came up through here, we pushed up to this swing, pulled back, had a nice mid-band bounce in the pre-market. This would have been around 5 o'clock Pacific, 8 o'clock Eastern, roughly. You can see it had a nice long trade here. And so here's 630. So 630 comes along, and this is a very common occurrence where lately they've been in the European in the pre-market sessions. By the way, everybody see the YM chart here, 4 range. For those of you that are new, of course, we have all our indicators on here, the background colors, bar colors, predictor, mid-band, all the bands here. Everybody, I'm sort of skipping forward. I'm not going to spend a lot of time sort of on the basics of our indicators. Almost everybody here should pretty much kind of understand what these are and what the trade setups are. We're going to focus more on how to deal with the price action early. Does anybody not see YM with all our indicators on it? Cursor moving, everything good? Cursor moving back and forth. YM, 4-range chart, indicators. Anybody out there? Hello? Anybody awake? This thing on? Roger, Doug, Mary? Okay. Oh, hey, Mary. Okay, you made it in. Good. Mindy, everything is good. Okay. All right. So I think the challenge is this, is that the natural tendency in the market when a market's going up like this, particularly into the open, is that you are going to think continuation, right? You are going to think trend continuation. So it's 635, 4-ish. When we get this pullback, and I distinctly remember calling this out and taking this trade, we had this perfect box at the mid-band. Now your inclination at any other given point in the trading session or day would be to bias to the upside, yes? Because at the time, let's go back. Let's pretend we don't know what happened. Let's go back and recreate 634. There's 635, or here, let me blow this up. 633, 634. So you're about 3-4 minutes into the trading session. Excuse me, we kind of peaked out here. It's 183. We see it was trying to get back up here, It couldn't. It kind of stalls out at the mid-band here. And so I can tell you this, that with the exception of 6:30 to 7:38, that first hour, hour and a half, I'm not saying you completely ignore the background or you completely ignore the trend, but this would be one of the exceptional times where you can allow the market to trade either way, okay? Because in theory, it could bounce and go right back up out of your mid-band box, or we could be looking at a trend reversal and it could break down. We don't know. And we have to allow the markets, the market to have some freedom of movement. Now, I know that might make you nervous to do that early in the morning like that, so let's address that concern. In this particular case, what happens is YM breaks down through support, giving us the short. But now, if we didn't take that, what are we looking for here at 6:35 to happen if we missed the out-of-the-box short? Okay, you missed this. Let's say hypothetically you had the long only turned on and you didn't get filled on the short. What do we do now? Do we panic? Oh my goodness, this thing's going to tank. I'm going to miss the big move in the morning. It's going down now. What am I going to do? You see we're going into a transitional background. How do we handle situations where we miss a thrust part of a move? Like what happens here. What's our mantra? How do we deal with this, everybody? Tomorrow morning you get up and you're in the live room and it's 6:30, let's hypothetically 6:38. You see exactly the same pattern. What are you going to do? Yeah, good. Everybody got that. We wait for a retracement. Now, if and when this was to retrace, where most likely will it go? If and when this was to retrace off of this thrust move down through the box, where might it go, and what are we going to do when it gets there? Yeah, back up into here. You've heard this 1,000 times, and Gary really drives this home, not only in every webinar, but we both do in the live room, right? If you break a swing, more times than not, it will come back up and check where it broke. So explicitly, just to be clear, what we're saying here is that this is broken. Let me blow this up a little bit. And I remember calling this out in the room and taking this trade. So you're not alone, right? We're expecting a pullback somewhere up into here. And the challenging part, of course, is we don't know exactly on these retraces how far they're going to go, but we'll have some clues, right? And then if we're going to continue down, we are going to expect something like this. So in the room, you might hear words like, okay, it broke the swing at 59, 55. It went down to 42. Take your scalper coin, which is lingo for saying we've dropped about 12 ticks here. You should be taking some profit if you're in multiples off the table. Scalper, hence the name scalper coin. Scalper generally is anywhere from 5 to 10 ticks, 6, 7, 8 ticks. We're pulling some money off the table. We're lowering our stops. And for those of you who aren't in it, we're looking for a pullback up into here for a roll short. Yes? So let's go bar by bar and see what happens. Okay, right here. Now we're at 636, 637. Where are these bars located right here? These two bars are located where? Right where it broke down. The bottom where it broke. It's coming into the sweet spot of where we want to short, yes? right? Now, when you look at this chart, you see that we are in a transitional background. This is one of, like here again, I'm going to emphasize for those of you that came in late, this is one of the exceptional times when, I'm not saying we throw the background colors out the window. I'm not suggesting that we would never suggest that, okay? Background colors are important, but don't let them dissuade you from the fact of the overriding important thing here, which is price action. You know, price action. Whatever the price is doing, that's driving our trading, the trades that we take. Our trading mentality is driven by what the price is doing this early in the morning. You know, we're not so much focused on colors of indicators. We're going to just sort of set those aside for the time being, if you will, right? All right, let's play this out. We come up, and what do? We roll over. We get short. Technically, you could have come back into the box and got another short. You could have shorted a bar flip. You could have put a Viper sniper line up there. You could have, all using all manner of tools in the Viper tool chest. You could have had a ray, a line. You know, there's different ways you could have gotten in here. By hook or by crook, you're short, yes? And you came down to that swing again. Now let's go ahead and play out what's going to happen next. So just to be clear, so we're all on the same page. And this normally happens, not all the time, but it normally happens where if you miss the initial entry on the box at the midband, you normally get a second shot when it will pull back up somewhere. Not, sometimes it's shallow, it doesn't go all the way up there. Sometimes it'll go a little deeper. Sometimes it'll go all the way up here above the midband. And I know that freaks some of you out. I understand that. But you got to be nimble, all right? You got to be quick, and you got to be nimble, and you got to be ready for these moves early. You know what I mean? Drink some coffee, you know, do a little jig, a little dance, wake yourself up, because this is what early morning trading is all about, right? All right, now even if you miss this entry, what do you want to do as the market drops? You missed this one, you fell asleep, you were petting your cat, you stepped away, and you missed that one too. What are you going to do? Give up? Well, I missed that. You know what? They called that in the room. I saw it. I don't know what. I just couldn't pull the trigger. I missed that second entry. Now watch the thing drop, and I'm going to miss it. What do you do? What are you going to do? Here you're sitting at 638, 639, 640. You're 10 minutes into the trading. You've actually technically had two trade setups, 1, 2, and you missed both. I don't know. Day's shot. Might as well give up. Fold it in. Shut down the charts. We're done. That's it. Just go out and get some breakfast now. Day's over. Wait for retracements. Sit on your hands till you get a pullback, some kind of retracement. Hit sell and cross your fingers. Okay, you could do that, Carl. Breakfast time, David D. Check out, breakfast time, shut it down. No. You're going to get thrust and retraces, right? And this is how we trade it. The market's heading down, and we're waiting for thrust and retraces. Let me advance the chart and ask a question. Now, I know this is a challenge for everyone. YM was the exception here in the fact that, here, let me just do it this way. Let me do it a different way. And I try not to let other instruments influence me, but I actually do, as much as I try not to do that. I'm going to show you a couple other things real quick that could help your decision making in regards to YM early in the morning here, okay? And let me do it this way. Let me go pull up, and some of you wanted to look at NASDAQ too, so I'm going to pull up NASDAQ in this same time frame. Ready? Let me put it right next to here. Let me scrunch this down. Just give me 1 second, please. I'm going to pull over this. I'm going to pull over this NASI chart for you real quick here, so you can get a sense of what was going on with NASDAQ at the same time, because I know everybody want to look at both these together. Let's see if I can do this right. Let me scrunch this one up a little bit, pull it over here. Let's put this one to the right. See if I can get these two kind of right next to each other. All right, so here's YM on the right, and then here is here's your NASDAQ chart right here in the same time frame, right here like this. Okay, so here we are. Yeah, all right. All right, and this happens a lot. So while and I want to show something because I remember this distinctly, and we were watching this in the room as it happened, right? I don't have a Russell chart handy, and I'm not going to take time to load it because I think I can make my point just like this. You can see that right here that NASDAQ was much more aggressive in its sell-off than YM was early. You know, here you're starting to see thrusts down, right? Thrusts, here's your retrace. Each one of these retraces, the early mid-band box on NASDAQ was actually right here, which would have been approximately the same time as this box formed on YM. And so they both broke within probably a minute or so of each other. Because all these algorithms are very somewhat similar to each other. Russell was selling off like a big dog. Gary was short, and that thing was tanking like a big dog. Everybody remember that? Russell was not even looking back. It was breaking swings. It was just the thing was at this point I think done 30, 40 ticks already, right? So you can't, you know, let me be clear about what I'm saying here. As YM continually came down and tried to check the support and check the support and check the support and check the support, and NASDAQ was starting to rip down, and the Russell was selling off like a big dog. Retracement, mid-band roll, down. Retracement, mid-band roll, down, down, down she goes, right? When you get a retracement on YM, even if it's a shallow one like this and you're not back in the mid-band, what can you look to do in here? This is a point I'm trying to get to here. What can you do to do? It's in other words, it's not getting all the way. I know everybody wants mid-band trades, but you know what? When markets are moving like this, you're not always going to get all the way back up here. It's just not always going to do that. Okay, you're going to get these more shallow retracements in light of the fact that these other two were tanking. Go ahead and take the short. Take the short. I can't give you an exact percentage, but there is a very strong likelihood that YM will eventually come down and take this out and follow the other ones down. There is the rare occasion where it won't. Okay, there is occasions where equities can be divergent from each other. It does happen, but it's pretty rare. And let's see what happens. It rolls over and starts to tank, just like the other ones do, all the way down. Now, the beautiful thing today, NASDAQ, we normally know is sort of the, for lack of a better word, sort of cantankerous one of the group, in the fact that normally you can get some very deep retracements that go well above the mid-band, taking out swings, which is the frustrating element of trading it. But today that was not the case on old Nazi here. Today she just respected these swings and the mid-bands, just came perfectly back to them and rolled. Every one of these retraces was a short opportunity for you. I remember we were calling these out in the room live as they were happening. Came up, rolled, short. Came up, rolled, short. Came up, rolled, short. Over and over. You had 1, 2, 3, 4 entries. 5 entries, arguably 5 entries right here. And then I remember this one, she just fell off the map. And by this point here, as I recall, it's after 7 o'clock, we had minor impact news, but I think it was slightly bearish, and the Russell was just falling off the map. I mean, by this point, I think the Russell was down like, I don't know, 100 ticks or something like that. And YM followed suit all the way down, each one of these being retraces. You only had a couple shallow retraces to get in on YM. You had one here, you had one there, one here, and then another shallow one right in here. And granted, that's the challenging thing about trend moves, okay? And you've heard me say this 1,000 times, is we have to think of retraces as a window of opportunity, a strike zone, if you will, where it can go shallow, mid-band, or deep. We have to be prepared for anything in here to take rollovers. In the case of NASDAQ, sure, it came back and respected the midband. You had 1, 2, 3, 4, 5 beautiful rollovers short. Right? Came back up. Here, there's number 6 right there. But the thing I want to back up, Mary and everybody, I want to, before I move on, I've got some other things to cover here. Does everybody see how we handled the transition from, and this was her specific question, was how do we handle a transition from a market that's been moving up into the open in the pre-market and or European sessions, and how we deal with trend changes early, which is what we're addressing right in here on YM. And the fact that if you don't get the initial thrust move, that you can always wait for some kind of pullback or retracements to get in, because they will occur. Yeah. Yeah. Yes. Yeah. Yes. Every time NASDAQ came back up to the midband there, Mary, that represented a short. And you would have boxed it in, or whatever tools you like to use, the line tool, the ray tool. You know, I mean, market order. It doesn't any tool or any way to get in. Every time it retraces up to the midband and rolls on NASDAQ, that was a shorting opportunity. Absolutely. Every one of those, all the way down. Every one of them. Boom, 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 boom. We were calling out these swings. We were calling the retracements in the thing. You got to be able to listen selectively. This is really important for everybody, especially you new guys, new girls and guys and gals. It is, you know, when we're calling out these swings, we're calling out normally trade entry possibilities, like short rollovers at the midband or near it. We're calling out stop levels and target levels. And what should happen is you should get to a skill level where you're looking at your charts. And ideally, you could be, if you have multiple screens, log into the room, put the room charts on a screen, and then have your own charts set up like this that you're actually trading on. Object trader, everything all set up, taking your trades on your own charts. And so when you're taking your own trades, you're seeing them just like we are. That's the whole idea, right? You're actually seeing these trades as we're calling them out. So you're selectively listening. If you're not trading oil, you're not paying attention to those calls, right? If you're not trading the Russell, you don't care about Russell calls. If you're trading NASDAQ and you hear a NASDAQ comment, we perk our trading ears up and we listen for the swing levels in the comments, right? Same with YM. If you're trading YM, just focus on those calls and try to, if you can, tune everything else out, because it's noise. It's not affecting what you're actually doing. All right, I'm going to move on to another topic. Is there any questions? Have I sufficiently addressed this issue? Right, Mary. That's just to be explicitly clear about this. It not necessarily your mistake, but what we're trying to suggest here is that early in the mornings, especially around the open and news events and high energy times, very often those are times when markets change from one trend to another. In the case of NASDAQ, there were huge moves up here in the pre-market session. She came and oscillated and chopped around the midband, and then very clearly went into a downtrend here, right? I mean, by this point on this thrust right here, we actually did change the background color on NASDAQ. That same thing that happened here did not change it until over here on YM, but it eventually did. Well, I understand that. She's saying that I was trying to stay super disciplined, long only. This is the one, yeah, as I said, this is the one time where you can make exceptions to that and you can look for trades either way. Right. Because these transitions can occur. But like I said, even if you miss the initial box on both of these, even NASDAQ, if you had long only and you miss this breakdown, this thrust, you step back, take a deep breath, listen in the room if you're trading NASDAQ, and you wait for that retracement, and sure enough, it came right back to it, right here. There's your shot to get in, like 6 minutes later. Carl says, don't feel bad. I'm not very good at that exact trade either. Well, Carl, Mary, everybody in here, let's all make a pact with ourselves. It's pinky swear that we're going to try to look at this differently tomorrow morning. And when we see similar conditions set up, we're going to be prepared to step in and take those. Okay? Sound good? Pinky swear. Come on. All right, good. All right, now let's come over here. Now I want to show something. I'm going to blow up YM. I want to transition into another topic here that I think is really important. All similarly related to the whole trend change issue. Let me pause the screen so I can expand YM. Stand by for a second, please. I want to look at something very detailed over here to the right that happened, I think, around 7:30-ish. All right, give me a second. I'm going to blow this up real big so we all can see it and get real comfortable and clear with what's happening here. All right, here we're coming up on 7:30. Let me bring the Pervez, yeah. Now, if you're looking at the backgrounds, as we showed here shortly after the open on YM, when we went from the green background on the uptrend into this transitional color, and then eventually, of course, you see it turn to red when the downtrend really sort of unfolded here. That's why I was saying you don't have to necessarily completely chuck the background colors out the window. That's not what we're saying. We're saying is that don't let it overly influence your trading decisions. You know, we really focus on the price action early, and sometimes the background will sort of lag that a little bit. Okay, it might lag it a little bit, and so you can miss some trades by doing that. So we're a little less focused. Eventually it did turn red, and of course we got the beautiful downtrend. Now let's look over here. All right, so the market's been open about an hour. We're still focused on YM here. And we did get one more pullback up into the midband right in here, which never filled short. And took that out and started to go back up into here. Now we had some discussion live in the room, and this in real time, if you recall, when a market is between, and I really want to be clear on how I just go over really how we address this, because you get some sort of what we call sort of a transitional situation here. After a long, powerful downtrend, you hear a lot of terms in the room like it could go up and check phantom. When we say it could go up and check phantom on a retrace, what are we talking about? Anybody? Had the strong sell-off in the market here, and we're getting a deep retracement. It could go up and check phantom. What does that mean? What is that? What is the word could go up and check phantom? What are we talking about there? Everybody know what we're talking about? What does that mean? Could go up and check phantom. I don't want everybody to sort of glaze over when we say that. I want everybody to be really good understanding of what that means. It's Halloween. Yeah. Yeah, 6 and 7, the outermost band. I think if I was to pick out, you know, one or two trading issues that seem to cause the most, how would you say, concern amongst traders, it's this whole issue of when the market, after a trend move like this, and here's how I'm going to put this, okay, and tell me if this is right. When you're stuck in this area right here, the phantom is referring to the outermost band. After you've had a long move, the outermost band is referred to as the phantom. In the old days, we used to call that a deep probe, for you old timers that have been with us forever. Remember, we used to call that deep probes. A deep probe simply means that it's going beyond certain established swings, and that it's not necessarily given the fact that it's above the midband and under here that we have trend changed yet. In other words, as long as it stays under here, you could make the case that we're still in a downtrend. However, as this was doing it in real time, I distinctly recall saying if it pulled back and holds the midband around 89 and bounces, we could be looking at a trend change, and that could be a V bottom. Does everybody remember me saying that in the room? I was looking at ES at the same time, and ES was flying back up, and it clearly was a V bottom down here on ES. And those two parallel each other very frequently. So what we're saying on this area right here is that as long as it's trading in this area between the outermost band, phantom, and mid band, you could by all rights be shorting this, right, on rollovers. And if you're finding support in a good, well-defined range, you could actually be buying support. You could trade both sides of it. You could short it. You could buy it. You could short it and buy it back. You could buy it and take profits at the top. This is an area where, you know, as long as it's respecting the swings, that's an important critical caveat. It's got to respect this. If it starts blowing up through here or blowing down through here, that is off the table. Everybody see that? Yeah, when you get these deep retracements in a trend, David, they normally come up in this area, in this range right here. That's what they tend to do. And this is another sort of transitional area. Now let's play this out. Come down. Now notice what happened right here. I was buying support in here. I know some of you, I don't remember exactly who, but I know some of you were shorting this up here, taking coin down here. And I was swapping blankets with you. I was swapping blankets. I was buying it down here and taking profits at the top and trailing a stop up to the middle here. Come down, we check it one more time. We sit right on it. It holds. Remember in the room we said that? Remember? It's holding that. It's holding just under 89. It's going to bounce. It should do it right there. I distinctly remember saying that, right? Meanwhile, I'm watching ES, and ES is just flying up. And normally YM is pretty close to following it. Sure enough, it comes back up one more time and then starts to take it out. That's where we got a nice little runner towards the end of the trading session before we closed. Everybody remember this? So what I'm saying here is that in order for us to get a firm understanding that a trend change could be afoot, is that it was critical that this midband had to hold. Because if it came down and it blew through this and started heading back down like this, you know, I don't know, I'm doing a hypothetical here, you know, it comes down somewhere into here and then it comes back up and starts to roll and starts to exhibit selling off behavior again, then of course we have trend continuation to the downside. Mindy, yeah, I'm not explicitly saying to watch ES. I trade and I watch ES, and what I am saying is that YM closely mirrors it, and it's kind of like watching the dollar index and trading 6E with it. You know how they mirror each other, and if you're going to trade one or both, you definitely want to watch both, one or either or both, because sometimes 6E will preclude the move on dollar index and vice versa. It's similar on ES. Sometimes I'll watch ES, and YM's kind of tinkering around in here, and meanwhile ES is already flying all the way back up here, and that gave me a strong inclination that YM was going to get some follow through to the upside. Sure enough, it did right there. See it? So the thing to take away here in terms of this particular trend change was the fact that the midband was holding on support and that you were consolidating in this upper area right here, which was kind of telling you, giving you heads up that it was probably going to at some point break and start heading up. And then we come back, a couple of midband bounces. As I recall, by this point, coming on 8 o'clock, I stopped out of this trade up here and then I was done. I didn't trade YM anymore after that. You started to go chopping sideways. You did hold the midband and start to head up. Went right back to that 31. This is after we closed the room. You're at 8:30, 35 or something here. So it did start to try to, but it just couldn't get through that 32, 30, 32. Continued to be resistance for another hour after that. All right, does everybody see how we traded YM this morning? Does everybody see how we dealt with transitional trend changing type situations? And while this support was holding here, of course, you can see that we did have the transitional background color as well. Let me drag down. Anybody want to see NASI in that same time frame real quick? You want me to bring up the NASI chart one more time and wrap the morning up for NASI? Any NASI traders like to see that? Similar time period on NASDAQ? Okay, yes? All right, give me a second here. Let me drag that one over. Okay. All right, same time frame in NASDAQ. Now NASDAQ was a little different and divergent from what YM was doing. And oh darn it. I'm sorry, hold on a second, please. It's getting all cattywampus on me. Let me scrunch down the YM, tuck it on the right-hand side, and then pull over NASI at the same time so we can see the two right next to each other. All right, here's YM. And let's get NASI over here. Okay, here we go. Behave for me, NASI. Sometimes if you hit one of those arrows, it pushes the thing all the way to the, you have to scroll back. Here we go. All right, now let me, if I can, go back and explain how I personally handled this, and you can, you know, if you trade NASDAQ, decide how you like to deal with it. Let me take some drawing stuff off of YM so it's a little easier to see and more clear between the two. All right, so just to orient you real quick, YM is on the right, and we can see here that this is probably about 729, 730. It did the mid-band, which it didn't roll, and it came up, consolidated, and broke to the upside. Respecting the mid-band, holding support. We discussed this, yes? And over here at 8 o'clock, we go up and we start to chop, but we're still kind of drifting up. See the right-hand side? Okay, Patrick. Yeah, this is recorded. It'll be up on the web tomorrow morning if you got to take off. A lot of people got to take off early. I understand. No problem. And some people came in late. Don't worry. We'll get the recording up tomorrow. No, so yeah. So here's what I want to show. So NASDAQ was sort of very methodically selling off here. We saw all the mid-band shorts all the way down, right? And then and NASDAQ does this a lot. Okay, we get one more sort of thrust down here. Now, this is one thing I have to truly admit I really don't like on NASDAQ is that, you know, depending on the size of your box, you could have got faked into a short here. That you might have got a scalper and you stopped out. And then we do this sort of mind-numbing thing that NASDAQ will do is it won't really kind of support, you know, respect swings. It'll come up and it'll push a little higher. You think it's going to break and then it comes all the way back down, breaks it, comes down, checks a swing, breaks that a little bit, punches up. You think it's trend changing, but it isn't. Contrast the price action between about 730-ish and about 830-ish here with what you see on the right over here. 730-ish right in here and 830-ish to the right. Can everybody see the difference in this price action? In other words, the one on the left is extremely more choppy. Yes? See how hugely choppy that is? See how much more clean YM is? Truth be told, between these two instruments, I prefer YM by far. No question, by far. But the trade-off is this. And I'm not going to scroll all the way back, but just to get a sense of it. NASDAQ dropped probably twice as far as YM did. So for two $5 a tick instruments, in terms of sheer price movement, you get much more bang for your buck out of NASDAQ. So that's the trade-off. The trade-off is you get more volatility and larger moves on NASI, generally speaking, versus a YM move. This move on YM is probably half the move on NASDAQ. Let's do some quick calculations. 74 down to 40. 34 times 4 is 120 ticks was this drop right here. Huge. Tons of places to get in, right? The equivalent move on YM here was 160 down to, I don't know, 70, 90 ticks. So 2/3. NASDAQ, you know, almost every day runs more, you know, further in its sell-offs or runs up than YM does. But the trade-off is that sometimes when you go into these consolidation patches on NASDAQ, for those of you who trade it, you know, it's generally speaking not quite as clean as YM is in those same areas. You get a lot more chop, and you have to be ready for that. If you're not ready for it, what happens is you made all that money on the shorts, and then you start to get whack-a-mole in the chop. Yes. Doug type in YM equals money, NQ equals beatdown. Hold on. Excuse me 1 second, please. All right, I'm not going to badmouth NASDAQ. I mean, each instrument has its own qualities, good and bad. I mean, it's like any instrument, gold, Russell, oil. I mean, you've heard me say 1,000 times, instrument selection is critical and key to your success as a futures trader. You've got to be able to pick out an instrument, work with it, get to know its volatility like the back of your hand, so that when you see these price movements repeating themselves, that you know where to get in and what to do with them. And when you start to see things like this chop right here, you probably noticed on NASDAQ I got real quiet after about 7:30, 7:45. I wasn't taking trades here anymore. I've seen this 1,000 times. When it starts chopping like this, that is a sign for me to stay out. Right here. Just so nobody's confused about what I'm saying. When I see this kind of price action on NASDAQ oscillating around the mid-band with this choppy sort of mess, I personally, for me, I just stay out of it. I start looking for something else, and we got that on YM. We got this nice clear support move up. You know, go look at the Russell if you have the data feed. Go back and look at oil. Maybe something's breaking out there. You don't have to, by this point, certainly if you had taken any of these shorts on NASDAQ, excuse me, with one or two or multiple contracts, frankly, by this point at 7:30, you should have been at or beyond your goal to even want to deal with this. And we said that too, right? So many people had checked out and been done by the time we got here in the first hour. You're done. You don't need to continue to deal with this. And certainly by 8 o'clock, when this stuff started to happen over here, there was no reason to chase that at all. If you noticed on YM, when I stopped out of that last trade, I didn't say anything. So I was done. I'm not going to go chase all that. I'm just going to chop you up and give a big chunk of your winnings back, your earnings for the morning. Okay, David H. has a good question here that I think would be good to share with the team. Hey, BG, welcome. I didn't see you come in. And this is a great question. David H. says, one of the things I suffer from is when I box market around the mid-band, my breakout fakes me sometimes in the wrong direction and then goes in the other direction. If I loosen the box, then I am getting too late into the move. Do you have any advice on how to get past this? Well, that is a lot of function of the instrument that you trade. The one that's notorious, I don't know what you're trading there, David H., but the one that's notorious for that problem is NASDAQ. I know YM occasionally will have that problem, pretty rare that it will bust in one direction and go the other. NASDAQ is notorious for that, especially when it's doing this stuff right here. You're trying to box it like this, and it's breaking down and stopping you up, and you box it, you get long stop shot, and you just get all manner of whack-a-mole around in here. This is when NASDAQ is, when you see this, excuse me, this type of price action, and this is for everybody involved here. Oh, for Pete's sake, hold on a second, I'm getting all messed up here. Where you get into trouble with that, and I'll speak to this in a couple of different ways, is when NASDAQ is oscillating around the midband, or any instrument, and the midband is right in the middle. This is not a proper condition to look at putting midband boxes on when a market's doing this right here. This is definitely, without question, not midband boxing material. Everybody see that? See this? There's no meat in these moves. By the time you get filled, you're getting whacked. By the time you get filled, you're getting whacked. This is horrible. This is stay out, no mid-band trade time right here. So it's an instrument. It really is a function of the instrument. Sometimes, not very often lately, but the Russell can do that. Oil can do that. You're going to have to experiment with the size of your boxes on the instrument you're trading, or use a different tool. That's the other option for you. Use the line tool or the ray tool, or as we said back here on YM and NASI, Oh, I took it off here. Your other option is to, if you're having issues with boxes and filling and what have you, then let the box set up. Don't take it. Don't take the box. Don't let it fill. You can box it sort of with an indicator or what have you, and then look for taking the retracement. In other words, if you're getting faked in and out of the boxes for some reason and you can't, you're just not boxing properly, you get filled somehow, you get filled up here, it flips, and you get wild man or whack-a-mole in here, then you just simply have to wait for that retracement. That make sense, David? Sometimes 6B, NASDAQ YM, it happens. Yeah, it's a function of how tight or loose you makes the box, which has a huge factor in it. The time of day that you're doing it, and if you can't seem to get it down, I would say let it break and then trade the retracement. Boxes aren't working for you. You got to do a workaround. You see what I'm saying there? NQ, certainly that helps. NQ, certainly that it happens a lot. YM sometimes, and 6B seems to be better. Okay. Well, it's a function of your ability and skills to draw the box in the right place and the fills you get on the instrument that you like to trade. That's really what it comes down to, and that's for anybody. All right. Okay, good. All right. Any final questions on that? Okay, we're getting a little long in the tooth here. Was there anything else on that we wanted to cover? Do you want to look for, is anything else moving in the market? Do we want to kind of see if there's any currency trades? I know it's late setting up here, or is there something else you would like to talk about? Do you want to see if we get a currency trade before we close, or anybody watching 6J or 6B, 6S, anything moving out there? Anybody watching the markets? Anything setting up for us? Let's go ahead and pull 6J up real quick here. Yeah, okay, let's look at some live charts. What the heck? Let's see if anything is... And next time we'll spend more time doing this. I know everybody likes that team live trading thing. I know it's fun and it helps. We all share ideas and I don't know BG there. 6B's wiggling, 6J's popping. Do you think we've reached a bottom in the Russell? I don't know. I got to tell you, truth be told, BG, I stopped trying to call tops and bottoms a long time ago. It's frankly, between all us here tonight, that's a tough game to play. I trade the price action. It really doesn't matter to me whether it's a top or bottom anymore, to be honest with you. I look at what the market's doing, and then I trade it in the high activity time frames, and the rest I let go. The rest I just let go because it doesn't matter to me. All right, we're in sim here. Who wants to short this rollover on 6J? Yes or no? Who wants to short it? You want to put a sell order in here? I know we're almost running out of time. Anybody want to sell here? Sell? Sell? Pretend we have a box on? Where? Right here? Oops, snapped up in there. Trying to get it to set right there. Yeah. Anybody want to sell that? No! No? Isn't this the top of the range? We looking for a rollover? How about a mid-band box? This looks like a pretty good setup for mid-band boxes to me. Here's you get a box here. Here's a pretty good box right in here. This is good boxing material right in here. Let's get it down to the mid-band, put some boxes in there. What do you think? Nope, we're short. Who said to short it? I'm kidding. Don't panic. Everybody said no, don't take it. All right. Okay. David D, from now on, I try to stay out of messy stuff like this. Good. What did I just say? What did I just say? Not even 2 minutes ago. I said, when we're chopping around the mid-band, when we're oscillating up and down, you got swings. We just looked at an ASI chart. Looks just like this, remember? It goes down, goes up. You could make the case you had a pretty well-defined range here, and it did come up and check right through it and rolled over. So we are short. 6J is 6 1/4 a tick. Got to get some targets and stops in here. Target and stop. I was going to short two, so we had two, but We're filled on 1. So where are we going to buy to cover this puppy back? How about right in here? Coming down. Where do you want to buy? I'm going to put some buy orders in here. We're short. Buy order 1, buy order 2, buy order 3. A, B, C. Type in a letter. The community vote. Where are we buying this 6J short back? A, B, C. A is the tightest, of course. If you see any other level you like, type it in. You got 10 seconds. A, B, or type a letter in, please. We're taking a vote. A, tight, B, middle, C, loose. Buy to cover. Make it quick. It's moving in our favor. What you going to do when they come for you, Nazaru? While you're pondering that, we need some stops. Where are we going to put the stop at? A couple of choices here. We're going to buy it back above. Buy stop. It's coming down. A, B, whoa, everybody wants A. A couple of B's. All right, the vote is A. A's have it. Now, on a stop, we can go above. Here, let me give you some options. A couple ticks above our entry. Let's do two. We'll do 2 choices on this one. Or free trade underneath our entry behind that bar right there. A above, B below on the stops. Type in a letter. Collective team vote wins. A above, B below. Stop is above, meaning if it comes back up through our entry, we take a small loss. This one, you're guaranteed at least a couple of ticks on a win. A or B. A loose, B tight on the stops. Whoa, a lot of B's. A couple of A's. 1, 2, 3, 4, 5, 6, 7, 8. Okay, looks like the B's have it. All right, let's take A out of off the table. Yeah, so what you were looking for here. Okay, so what we're saying on this trade here was, and I know we just sort of popped this up and we're just, you know, it's in sim and we're just kind of playing around here and everything, but in a similar condition, if you see a range like this, more times than not, coming off of a downtrend, as you were on 6J here, this was a downtrend, right? And we're forming a lower range, and the upper part of the range is located up here. So by all rights, our mode of entry is buying support or shorting the top. Buying support, shorting the top, coming off of a downtrend into a range. When you come into the range off of a downtrend, the background's still red. Are we shorting the top of the range or are we buying the bottom of it? Generally speaking. What's our primary mode of entry? S, shorting the top of the range. B, buying the bottom of the range. Are you getting long at the bottom or shorting the top? B or S, type in a letter. Coming off of a downtrend with a red background. How do you trade this? How do you trade that? Consolidation. S, good. Your primary mode of entry on a downtrending move in consolidation until the trend changes is shorting the top of the range. Yes, good. That's our primary mode of entry. Isn't that why we look for the short on the roll? Okay, you A traders on the target, we're going to come down another minute or two. Boom. There you go. Done. I liked A because A faded this little swing. I think we all can see that the last time it came down here, it found support right around this 35 area. If you truly wanted out of that short, you wanted to fade it, and we did, and the wick of that candle filled it. Now, the fact of the matter is it could break this and go all the way back down into here. That's fine. But it's still technically a down move, Pervez. That's right. Staying underneath the phantom here, outermost band, staying under all these lines here. You've got good solid resistance up here. Every time it comes up, you short it. And these are not necessarily, I personally would not trade both sides of the range. When it got down into the lower parts of this range, we are covering our shorts. Covering our shorts. We're not buying and getting long here. Me personally, I would not. In the fact that it could just blow right through the bottom and you get full downtrend continuation. That's the risk of buying the bottom, getting long down here. Everybody said S, which under this condition, yes, you are shorting resistance as your primary mode of entry. Good reminder there, Peter. Take mine, come back, circle back, take your stop out. That trade's done. We shorted the roll. We faded the swing. We got a quick little pop. All right, we're right at the thing here, getting ready to wrap. I'm going to stop the recorder. Any final questions?